All right, let's begin. Hello, everyone, and welcome to Ruralco Water's webinar on the current state of the Murrumbidgee market and the forecast on what we could expect to see heading into the start of the new season. I just want to let you all know that this webinar is being recorded, so if you do wish to obtain a copy, please contact your broker after the webinar and they will be able to send you a copy. As well as this, if you do have any questions during the webinar, please write them down in the chat below and we'll try to get to as many of them as possible at the end of the webinar. All of us at Ruralco Water acknowledge Aboriginal and Torres Strait Islander people as the first peoples of Australia and the traditional custodians of the land and its waters. We pay our respects to all elders past, present and emerging. I'm Francesco Maese, the Senior Water Market Analyst here at Ruralco Water, and I'll be your MC for today. Presenting today we have Paul Cooper, Marion Graham, Beck Williams and Robert Zapala, your water brokers who each have an in-depth understanding on the water markets throughout Australia and experts in the Murrumbidgee region. I'll now pass you on to Paul, who will give you a recap on what's been happening in the market.
Thanks, Francesco. So we're going to start off by looking at what's transpired this season so far before we start looking into I'll just press the right button there, before we start looking into the forecast for next year and also have a bit of a chat about buybacks as we go along. The general course of the there we are. So we'll talk about the weather, climate and storages, and then how all those conditions during the course of this season have affected most of the products that we deal with on a daily basis there. So first of all, we look at the weather situation. Certainly a big topic of discussion as we've journeyed through the season. We've had obviously an El Nino that was a dominant force in the conditions early on in the season. Many people have found that didn't actually eventuate into what most people consider a typical type of El Nino pattern as far as the hot, dry, elongated pattern there. And now we've started to see the forecast suggest that that's about to wind up and we're heading into potentially the neutral or maybe even a La Nina event over the next few months. Temperatures have broadly been at some stages cooler and then moving into hotter and drier than normal, and then broken up by significant rainfall events that we saw during September, October, and even as recent as over the weekend there. So all of those things do have an effect on the markets as we go along. If we have a look at how that's affected storages, both Blowering and Burrinjuck are certainly not full by any means, but Blowering is certainly down in comparison to the last couple of years, around about 64% at present. Burrinjuck's looking a little bit healthier and probably more on par with the last couple of years. And those type of conditions those type of levels do certainly have an effect on allocations, particularly general security as well. Now, if we look at where the allocations are in relation to general security, it tells a pretty interesting pattern as far as a reflection of the conditions across any given season. The one that stands out to me on this graph is the period between 2018 to 2020, where you see significantly dry conditions resulted in very low allocations on general security. Interestingly enough, statistically, the average opening allocation is around about the 20% mark across the board, reaching up to about 70% on average. And we can see from the last 4 years now that the opening allocations have varied a little bit depending on what's in storage at the time, but has always ended up at 100%, just given the wet conditions and full storages. I find it interesting though, the level of increase has varied a little bit over the last few years, where it's required usage out of storage to provide allocation on general security. And we'll see that when we talk about the forecast for next year moving forward. But rather interesting to see how that all works out. On the temporary allocation front, the Murrumbidgee market has reflected a bit of the journey of the roller coaster, if you like, that many of the temporary markets have moved through during the course of this season. The big thing there started off a significant amount of trade in July, looking at the green columns there. We had a lot of early season buying interest on the back of the El Nino forecast. That sort of goaded people into a reasonable amount of activity. That steadily increased during into the spring watering demand type of phase. The red dots there are the big overlay that I find very interesting in relation to the Murrumbidgee market that we don't necessarily see in other markets in the Southern Basin. They are the IVT opening and closing events. As one was looming in September, we saw a significant amount of allocation transferred from other zones into the Murrumbidgee in preparation for a closing of in-trade, and that led to the pricing spiking shortly thereafter when the Murrumbidgee was closed off to trading into or out of the Murray. You'll see October, November, December saw a reduction in trade, and as rainfall came through, and that led to the lovely decline in the temporary pricing there. And that led us up to the next Murrumbidgee, or the IVT opening in January, which let water out into the Murray, which fueled supply into the system and then decreased the pricing on the back of the rainfall. So in the one season, we saw the pricing open up around about the $120 mark. We certainly saw pricing in excess of $200 up to the $250 mark. And now we're around about the maybe $10 mark, but we're still seeing a lot of ramifications after the rainfall events over the weekend. Now, that gives us a bit of an idea of where the temporary markets are up to. I'll now hand over to Mary-Ann Graham, who will talk us through the permanent markets and where things are looking as we head on into next year. Thanks.
Thanks for that, Paul. I'm just going to talk about the permanent forward and carryover and then some discussion on next year. So firstly, this is a chart or PowerPoint on the permanent markets. The high security has recently dropped off from the sort of highs that were, it was around 9,000 a meg. Our most recent trade in a small parcel was 8,550, and we also did a larger parcel, about 300 megs at 8,400. That's largely come off due to, we've had up almost 4 years now of low temporary. And this also leads to a subsequent drop in the long-term leasing prices, which are probably around 3.5%. Given the interest rate rises, obviously that makes high security not as an attractive an investment as it had been previous when interest rates were low and I guess the temp prices were higher. So that's what has caused that. The general security has done the opposite. More recently, has been rising. It had dropped last year down to the low 2000s again because of low allocation, temp prices being low. However, since the announcement of the potential water buybacks and the approval of the legislation to allow this with the government, we have seen quite a big uptick in demand. Move from sort of 2.4, and our last trade was 2.620 with temporary allocation including. So if you're wondering why the general security has gone up in the back of the buyback announcement and not so much the high security, this is due to the ratio between the two. So general security prices are around 30% of the high security. But the long-term average yield, or what the government calls the long-term diversion limit equivalent, is probably around 60%, which means they, at the rate that the price ratios are at the moment, the government would be better to buy general security over high to get their long-term diversion limit equivalent. And we saw this in the last year in the Bridging the Gap. The general security was vast majority of what was purchased by the government. So we believe that's why the general security in comparison to the high security has jumped. How do I get to the next? Oops, sorry. So this is on the lease markets I want to talk about. The lease markets, again, have dropped off from the highs. For high security first, this is the weighted average of our long-term leases. The reason it goes up in the future is because most leases have some form of indexation, plus we have less leases already traded out that far, so the weighted average goes up. But currently the long-term price of around a 5 to 6, 7-year lease is around 300 plus a 2.5% or thereabout indexation. It has been a little bit lower last year, or when we continued to have low temp with the sign of the El Nino coming in. It moved up a little bit, and it's sort of remained stable around that area. The general security leases are around 88 to 90. They don't move as much, mainly because when the drought or there are high prices, the general security doesn't receive any allocation. So it can't take advantage of the higher prices as much. So general security leases move around between $85 to $110 or so. I'll now talk about the carryover. So carryover is an interesting product for people who aren't aware. It is basically where you're buying space on somebody else's license at the end of the season. And we call this parking. So you're parking the temp that you own or could purchase onto someone else's asset. The prices of carryover tend to move in relation to the view of the market, the sentiment the market has for next year, less where the market views the temporary will be at the end of the season. So if the prices for next year are, the market thinks it's going to be around 130 and they think temps at 20, then you'd put parking space at 110. So that's effectively a simple way of looking at it. So it moves more in relation to what people's view on next year is. So when we were going into an El Nino or a warmer year, you can see last year they were talking about an El Nino. It was a bit higher. It was around 120. I think we did a few at maybe 125, 130. This is the weighted average, that chart. So it takes into all the trades that we've done. This year has been at 120 and it's dropped off a bit as 115 as we come into April, and the weather forecasts are showing maybe a move to the neutral or even to a La Nina. So that can move around. That's how that moves around. So if that sentiment moved, if all of a sudden the bomb announced, it's going to turn hot or El Nino again, you could possibly see that parking space move. So it's the differential between the 2 years that causes that price. The forward markets, again, obviously it's the market's view on the sentiment. You can see back in the drought where it was extremely high, around 400. I think we did some at higher than that. This year we did start some at 150 early on. Sometimes people, who want to lock in and further out from the end of the year when we don't know what the forecast is going to be, will lock in. It has slowly dropped off. It's around 130 at the moment. We have done it at 135. We haven't had as much volume. I mean, obviously with the forecast for the weather, people are considering what to do more and aren't necessarily jumping into forwards if they think it's going to be a sort of average or wetter year. Okay, now I'm just going to talk about the allocation forecast and a little bit about the IBT and climate. So the next slide shows, this is from the water allocation statement, the last one that Water New South Wales puts out. They have stated that the general security will probably start at around 5% in July. But again, this can easily change depending on if we go into a wetter period or towards the end of June and the dams fill up. These two outlooks are showing what they forecast for the allocations to be at the 1st of September and 1st of November. You can see, say a medium year, they're saying 35% in September and 65%. It's only in the wet years that they're saying it'll get to 100%. Now, for people who aren't aware, this is because the dams in the Murrumbidgee cannot hold a full 100% allocation at the start of the year. They're not as large as the Murray dams, which can. So what we have to have is, or what the water operators wait for, is for some use to come in spring, where they use a bit, drain the dams, and then it refills, and then they end up giving out 100% as time goes on. So this is just something to be aware of, because for a number of years people would forget it, but they never will give out 100% straight off in the Bidgie because of this issue with the size of the dam. So that's something to be aware of. Due to this factor, what we often see, and we saw last year, is that because there are lower opening allocation, the Bidgie compared to the Murray, which often opens at 50% or more, because Hume and Dartmouth can hold the full complement of allocation, it results in higher prices, often in the Bidgie to start with. And as we saw at the start of last year, the prices moved higher because there are more annual croppers who are deciding what they want to put in. They're deciding how much they need. They obviously want to lock in before the summer, or have at least some security of what their prices are for their budget. And so we saw this jump in that July to September, and the IBT shut. We had a lot of people move water up to the Bidgie to then sell it. And some of them did, and some of them missed it, because once people had got what they needed, then the price quickly fell off, as Paul showed in the previous one, in the previous temporary charts. So we would envisage this could happen again, depending on what the weather likes, particularly in that early July, August. So this is just something to keep in the back of your mind as well. And we just talk to your broker. We would tell you if it looks like it's going to trade. There's a website you can easily look up as well. This is just finally a look at the weather outlook. So from the BOM, both the minimum and maximum temperatures for April to June are likely or very likely to be above medium. It's a little bit warmer. The above medium rainfall is likely to be 60 to 80%. There's a 60 to 80% chance of it being above median. I think the median rainfall from recollection is about 88 mils. So, an average sort of autumn, I guess, possibly, or maybe a bit of above average. And most of Eastern Australia has about an equal chance of above and below median rainfall. So it probably doesn't tell you a lot. But the other thing I just wanted to point out, this chart is on the BOM, that's this graph, and it's the ENSO index drivers. We have a weather forecast that we do receive from one of our colleagues in the US, that if you wanted to go on, please let your broker know, because we send it out once a fortnight. And this shows that in August, a few of the other models, the global models, are showing that we are going to go into La Nina. BOM, however, is more conservative. So that's just an interesting factor there, sort of putting August at neutral, and the other models are showing a stronger push to the La Nina. So that's just an interesting thing to take it, and we'll keep you informed on that as time goes on. I'm going to hand back now to Paul to talk about the water recovery and buybacks. Thank you.
Thanks, Marianne. All right, so if we have a chat about buybacks, that's something that has been on people's minds for the last 6 months or so, and I think it will be a topic of discussion over the next potentially 6, 12, 18 months as the government works through its process. So there's two parts to it that we constantly think about. First of all, how will the process work, and what can we do to help out people? And more, almost as interesting, more of the long-term effects. What happens after the buybacks are completed? What does that mean to the complexion of the whole trading markets across the Southern Basin? So as a bit of a quick recap, many people would know that there was legislation that passed the federal government at the end of last calendar year that removed a lot of the obstacles or barriers for the government to come in and buy water back from irrigators. Following that legislation passing, they've been through a consultation phase during this year so far. That's pretty much wound up now and been redirected back to the department for consideration before tenders do start to come through. We don't have a date as to when tenders are going to be released as yet. There is lots of speculation as whether it's going to be next week or 6 months' time. Short answer is we don't know, as the government's still working that out, but we can assure people that we will communicate to people exactly when we hear something further and how we can get you involved. As far as things go, there's been a lot of discussion as far as whether irrigation corps will be included or not. That's something that we can talk about individually, but it is certainly an evolving process. So if we look at how that can actually affect the overall markets, if we divide the potential effects into short-term or long-term effects, first off, we look at the temporary market. As we've just seen, the recent conditions have been probably average to wet, and storages are pretty full. So not too much concern on the temporary market at the moment, as supply is plentiful and the pricing has dropped off, as we saw once we saw the rain come through. On a more longer term basis, this is where a bit of concern does come in. If we saw a repeat of the 18 to 20 sort of time frame, storages dwindle down and allocation supply starts to dry up. If we deduct the 450 gigs of buybacks that the government will be looking for this year, some of the modelling suggests that we could be anywhere up to 800 gigs shortfall in the Southern Murray-Darling Basin. Now, for those of us who remember the pricing spikes of 18, 19 and 20, that has the potential to be exacerbated during if we saw another repeat event. So overall, I think it's once we see the buybacks completed, it does have the potential to increase a bit of volatility, both in the Murrumbidgee but also other markets as well. And that's something that some of those products Marianne was talking about, whether it's forwards, leases, carryover, that's something that people can use depending on their situation to mitigate those types of fluctuations. If we looked at the permanent market, the short-term response to buybacks on the horizon has been probably overall a reduction in sellers for the people who don't have a specified short-term time frame to obtain funds from selling entitlement. People are going to hold off and wait for the buybacks to come out on the hope or expectation if they get involved, they'll be able to obtain a premium in comparison to the typical permanent market. In the medium term, you do see a bit of buying demand come through as buybacks roll through. You may see people who might look to take a punt and buy into the market with the express view to sell to the government, or you see people on the other way around who are accepted for a buyback and then come back into the market to purchase or repurchase what they've sold, ideally at a lower price than what they've sold to the government for. On a longer term basis, not in a few similar characteristics to the temporary market. If the 450 gig has been extracted from the market, what happens to the permanent market, particularly in times of drought? Well, it's more likely to see a reduction in willing sellers. Those sellers who may be tempted to sell will probably ask a premium, and we may see the price rise beyond where we've seen it go previously. And that's all going to depend on a number of factors. Weather, of course, is a big one. That's a drought will spur on people buying for security. Other more external factors, more of the cost of capital and so on, and commodity pricing will have a significant effect there as well. But in either way, we'll be dealing with a smaller pool of potential sellers there. So that's more likely to have an increasing effect on the price. Right, what we'll do now is move on to answering any questions that Francesco has been keeping on as we've been going along, and we'll hand over to our panel of brokers to answer some questions. Thanks.
Thank you, Paul and Marianne. That was great and very informative. So let's move on to these questions. So first one, Beck, I'll get you to answer this one. This is leading on to sort of what Paul was talking about. How is the government going to buy the water, and will they be buying from Irrigation Corporation customers?
Yeah, okay. So as Paul stated before, the government's actually mandated to their own tender process. There currently isn't a tender open, but once an official announcement has been made, Ruralco will send out a notification to all those on our mailing list. So far, they've indicated that they won't be purchasing from Irrigation Corps in their first tender. but there is absolutely nothing to say that they won't be after that. It could take several rounds to get what water is required. But really, until the Commonwealth officially announce their intentions, nobody knows what, where, or how much will be acquired.
Thanks, Beck. And you know what? We might just keep this rolling with you. So this next question asks, should I move my water from my irrigation account to a river license?
Okay. That's something that varies from person to person, and there's many factors to consider, including the cost of transferring the water and what would happen if the government doesn't buy your water. What would be the plan then? If it's a road that you want to go down, I suggest talking to your broker and discussing it further, really. But my initial reaction would be, if you're a motivated seller with a decent sized parcel and seeking a realistic price, then yes. If you're just taking a stab in the dark with a really high water price just to see your luck, it may not be worth your while. But at the end of the day, the decision is yours, really.
Beautiful, thank you. And do you know what, Rob, we might flick the next one to you, give Beck a bit of a break. So this question asks, what are the opening allocations and what are the chances of general security reaching 100%?
Thanks, Francesca. I think, like Marianne alluded to, preliminary forecasts indicate that there's enough resources to at least open with 5%. Again, 1st of September allocations could be anywhere between 5 and 45, but we've got to be mindful that it's just going to depend on, obviously, rainfall. And like the graph showed, under wet conditions, potentially by November, we could be at 100%.
Nice, thank you. And do you know what, Rob, we'll let you bring this one home with the last question here. So what could the price be at the start of the new season in the temporary market?
Based on like a long-term average opening price and a short term, I'm going to say probably between 100 and 150. And that's taken into account the long-term average opening price in July is normally around that 185, 186. Short term, again, same 95 to 96. But it really depends on rainfall, obviously carryover, crop intentions, and probably more importantly, supply and demand. But around that 1 to 150, I think.
Oh, thank you, Rob, and thank you, Beck, for answering those questions. And that brings us to the end of our Murrumbidgee Market Update and Forecast webinar. We'd like to thank you all for your attendance today, and we hope you have found the information presented helpful and insightful. Once again, if you'd like to find out any more information about the Murrumbidgee market and what was presented in today's webinar, please reach out to your local Ruralco water broker, and they'll be more than happy to help. Thank you, and we all hope you enjoy the rest of your day. Goodbye.